advisor know what the right allocation is if they don't ask the right questions and find out the big picture, like what your goals are, when you want to retire, how you want to retire. How can you ask that? It's like a doctor. You walk into the doctor and they just look at you and go, yeah, you look good, without doing any blood tests or checking your blood pressure or anything like that. Chris, I love that you care about that. So why don't we start off with allocation strategies? You know, when people want to invest, what are some options for them out there? And this will help you know what you could be doing, because just doing the 401k, that's a great thing, but there are a lot of other options out there, and then speaking with a professional, they can help get you to those goals a lot quicker, a lot safer, and a lot better, with a lot less stress. What do you always say?
He said it the first time we ever had him on, pass the ulcer.
Yeah.
Pass the ulcer.
It was perfect, you know, and in fact, I can vouch for every time I see Chris, he's always calm, cool, and collected. So he can take a few more ulcers. Go ahead and give him a call.
He is. He is. I mean, you go to the gym and we're all stressed out working out. You just are like steady Eddie, man. It's her. He's like that at the gym too. You think you got him, and all of a sudden he's going by you at the end. You're like, damn, tortoise. It's all about how you end, right?
Right. It's not how you start. It's how you finish.
All right. So let's talk about start and finish. What kind of allocation? What kind of options do our listeners have?
Okay. Yeah, so I call this strategy allocation because most people have heard of asset allocation. If you go back to the traditional model of an asset allocation, you have you're setting up your 401k for the first time, and they tell you should have this amount in stocks and this amount in bonds and this amount in cash,
right,
this amount in international investments, this amount in U.S. U.S. stocks.
Most people just go, okay.
Right.
Well, you consider that traditional diversification, right?
Correct.
Okay.
Correct. So what has happened over the years, though, is there's been different strategies that have been implemented, and some people have started to drift one way or the other, saying, oh, this is the best strategy or that's the best strategy. For example, a strategy that became very popular through the 2008-2009 fiasco was tactical allocation. So tactical allocation would be, so you take your traditional model of how much you have in bonds and stocks, let's say, and based on market environment or based on current research, you would increase your allocation to bonds to be more conservative and decrease your allocation to stocks, or vice versa, depending upon what the market would do. So you would have some parameters of how far you would swing one way or the other, but basically you're adjusting your underlying asset allocation regardless of what your risk tolerance is or what your age is or what your goals are, just strictly based on what the market environment looks like, to try and kind of time the market a little bit with the ups and downs of the market. Well, this became very popular when a lot of these tactical allocation managers didn't lose a lot of money in 2008. They made great money in 2009, and so everybody started raving about, oh, tactical management is the ultimate way to go. The problem came when the market started to get really volatile again, but was going up, which we've seen over the last couple of years.
Right.
So the tactical managers, and not all of them, but tactical managers started making these adjustments to the portfolio. Oh no, the market's crashing. So they would get more conservative, and then the market would rebound and they'd be more conservative, and then they'd try and catch back up and the market would fall again. And so they were
catching
behind.
a falling knife.
Yeah. So then it went back to these traditional models, saying, well, the traditional model, if you would have just buy at the beginning and held it all the way through, you would have been better off than the tactical strategy. So there's other strategies out there. Alternative investments have become very, very popular. Things like owning commodities and gold and real estate investment trusts and limited partnerships and equipment leasing and all these things that we consider the alternative world.
We give them alternative. They can donate to the Don Angino Fund, and we'll figure out what to do with their allocation.
Hey, that's not nice. But they can donate to Push-Ups for Charity. We'll talk about that later.
That is it. There you go. Good lead in. So then there's risk management strategies, hedging strategies, market timing strategies. So there's all these different strategies out there. And what I say is that nowadays it's not so much to bring in a client and say, hey, let's all, how much should you have in stocks and how much should you have in bonds? But based on your goals and objectives, how much should you have in all of these different types of strategies? Some of these strategies may be more important to one type of investor than another. So now it's not so much just diversifying amongst one individual portfolio, but diversifying that individual portfolio and then diversifying amongst a bunch of different strategies that are out there. So it's more complex than it was in the past. There's a lot more options for people, and it takes a little more time to really know what you're laying out for a client. But I think it's worth it to take the time and really put together a comprehensive strategy which uses all the tools that are out there for people.
Yeah.
So I'm going to bring this up because I think that the reality is when someone goes and reaches out to a financial planner like you, Chris, they maybe are afraid to. Maybe they don't know. They don't think they need a financial planner. They're not sure if they need a financial planner. So who would be reaching out to you at Infinity Wealth Management? Who should be reaching out to you?
Everybody.
How about say
Everybody.
me?
Well, I'm not going to lie. There's some people. I've met some people through the years that I have a client right now that if it wasn't for the fact that he's in his late 70s, early 80s, his wife has Alzheimer's, and he needs somebody to assist with managing the portfolio at this point forward because he is losing his ability to take care of his own money. But
Right.
he was a great manager of his own money during his lifetime. So there are people out there that can do it themselves, and they do it really, really well. However, I'd say the majority of people out there are not good at managing their own money. They're too emotional with their own money.
Bingo.
They
There's the
make
key.
terrible decisions when it comes to their own money. They're too busy to pay attention to it with the amount of time that they need to pay attention to it. And so days become years, and people don't look at their money. They don't think about their portfolio. And then all of a sudden they see something on the news, and they get emotional, and they make big changes, and it just turns out bad in the long haul for them. Those people need to come see a financial advisor so that somebody can help assist them with taking care of their money. But more importantly, somebody can sit down and say, what are we trying to accomplish? What is the goal? What are we trying to do here? How much are you saving? How much are you making at work? And really lay out a plan for them to make sure that they're successful.
And I'm quite sure. And if you just tuned in, we're sitting here with Chris Ingram with Infinity Wealth Management, located right here in Santa Clarita. Chris, how can they get a hold of you? There's I'm sure a lot of you out there, and admit it, go, you know what? I need to speak to Chris. And you really should, because, we've had a great run in the market. What if it does turn around? And at there's some point it's going to. It's just the nature of all markets. So you need to talk to an expert. And you just, heard from Chris how calm, cool, and collected he is, how educated and informed he is about guiding you in the right direction by asking the right questions, just like we do here at Cherry Creek Mortgage. Chris, how can they get a hold of you?
The best way to get a hold of me is to call me. My phone number is 661-255-9555. I'm at extension 1616 at that number. Another great way to get a hold of me is my email address, which is cingram, that's INGRAM, so cingram@nextfinancial.com.
Nice stuff. Thank you for sharing that.